Hello, I'm Tai Hui, the Chief Market Strategist for Asia Pacific at J.P.Morgan Asset Management, and welcome to the second of 3 videos on the market outlook for 2021. Now, in our first video, we discussed the global economy and policy outlook, much of which is still dependent on the COVID-19 pandemic. In this video, we will share with you our thoughts on how investors should allocate their assets and the opportunities in global equities. On asset allocation, at an earlier phase of the economic recovery is typically positive for risk assets such as equities, corporate credits, as well as emerging market fixed income. Now, having a sustained solution to the pandemic, such as a vaccine being developed, can unleash a fresh round of risk-on rally, with many of the worst-hit sectors appealing to investors once more because of their low valuations. The accommodative monetary policy should also add to this pro-risk bias. Hence, we believe that investors should consider adding equities, high-yield corporate debt, and Asian fixed income to their portfolio. Now, some investors are worried that a lot of the good news is already priced into equities. We believe the relative performance of equity markets across the world in the past 6 to 9 months have factored in a steady growth recovery in 2020 and 2021. But the differences in earnings forecasts for different sectors and different markets are still very large. Now, these differences could allow some markets to catch up over the course of the next 12 months. Now, medical solutions to the pandemic, such as a vaccine, could also prompt a sector rotation from the leaders to the laggards. This will imply a more constructive environment for sectors such as consumer discretionary, travels, material and energy, industrials and financials once a vaccine is developed, or other ways that the public can return to their normal lives. Overall, the US, Asia and China remains as the core of our equity recommendation in 2021. A more stable US-China relationship should also improve market confidence on Asia and China. A weaker US dollar should help to drive capital into Asian markets as well. Now, as the pandemic comes under control, investors should look to diversify globally, such as Europe and non-Asia emerging markets. In terms of sectors, this rotation will also benefit materials, consumption, financials, travels, and industrial sectors. The key here is to stay nimble. It doesn't mean that we should time the market, but we should review our equity portfolio and assess the global environment and be ready to rotate once the pandemic comes under control. If you want to get the full version of our 2021 year ahead with charts from our popular guide to the markets Asia, please reach out to your J.P.Morgan Asset Management client advisor. See you in our next video, which will discuss more on investing in fixed income assets.